provided you have been in the system, in our pension fund system, for at least, say, a year from the date of your joining, because as Lisa explained earlier, we have 1 year, once a year we pull in all the data and we're getting all the information from our organizations, particularly also for new entrants. But once that is the case, you can every year access your annual statement mid-May, roughly, of every year. And then there is the benefit estimator where you can, once you have registered, you can access your estimate. And again, as Lisa explained, probably makes more sense closer to retirement. However, already as a sort of recently joined on quite far yet from retirement, it may still be interesting for you to have an idea of what would be your future entitlements based on what your service is up to the date of when you run the estimate. You need to register for these two tools because they are obviously containing very specific information and that is secured. So the registration is fairly easy. What you need is your name, and you know those, and your pension fund number. If you don't have that number, you can get it from your personnel offices. And if they don't have it, they can always contact us and get it. Please, we do not give out those numbers over the phone for security reasons, because anyone could call us, and that, again, you know, you can access very confidential information, and especially in the case of divorce, for example, you don't want to get that info, have that information go into the wrong hands. So once you have registered, and again, it really is very easy, you can then access these tools. And then you have other information like guides, the informative booklets, the annual report, investment reports, regulations and rules of the fund, and something that might be very important for you is all the official forms of the pension fund. For example, as I mentioned earlier, and we said the designation of beneficiary form A2. If you haven't yet filled that in, you might just download it and then have it sent to us through pouch or hand it to us. So we can then enter it in our files. Or for those who are going to retire in the near future, there are forms for those who are entitled to retirement benefit. It's form 10C7, for example. All the forms are online. If you change once you're a retiree and you change your address or you want to change your bank information, you have to inform us. We have to get that information in original form, meaning with an original signature from you. So again, there are forms specifically for that. For those who may be entitled and could go on the two-track, there's a two-track form, etc., etc. Just here, you see what you need to register. You need your pension fund number and then your names, and once you have registered, you just submit your registration. This is not a registration form, sorry. But once you have registered, you submit your registration, you have entered at the same time an email address. Within a few minutes, you will get your password. Once you have your password, with your pension fund number and the password, you log in and if you run an estimate, for example, you get on an estimate site where you can enter the information that is relevant, like, for example, your date of separation, or your estimated date of separation. And there you can then run an estimate, and the estimate would look roughly like this. So here we gave you an example of someone who ran an estimate for a retirement benefit under Article 28, meaning an unreduced benefit for someone who has reached normal retirement age and is entitled to a benefit. So that person then gets this information. What would be payable is either the full pension with a prospective survivor, for someone who in our files shows up as married, and you get the default lump sum. So even if you do not think you want a lump sum, you get in the estimate always the information on a default lump sum payment, meaning the maximum 1/3 lump sum, just in case you were interested to know this. On the website, you can actually enter different parameters. So you can say, okay, what if I wanted a lump sum of, instead of, for example, this person, the default lump sum would be 103,417. It's under number 2. So let's go through it just. But number 1 shows you the full pension entitlement without the lump sum option. So that person would be entitled to 53,886 per year. So you divide that by 12. Obviously, that would be then your monthly entitlement. And the prospective survivor of this retiree would be entitled to 26,900 something per year in case of death. If, however, you're interested in the amount, if you were to get the full lump sum entitlement of 1/3 maximum, that's under number 2, and then you see here, reduced pension is the yearly amount you would get as a pension payment for life, which is 20,600. Reduced because here, if you were to get the lump sum of 183 something thousand, or the of say 103,000 in that case, then of course your monthly benefit for life is reduced accordingly. And the prospective survivor, you see here, would still get the 26,900. Are there questions maybe? I don't know whether. Yeah. Okay, well, we can come back to this if this is too much information right now. But that is how to read the estimate. And here's the annual statement. There's a lot of information. Maybe I don't go into details so we have more time for questions and answers, but just so you see, this is what an annual statement looks like. Probably you already saw it. And on it you will find different information. I think what is relevant to point out maybe is that the total amount that you see under contributions received by the fund corresponds to your own contributions made. It does not take into account the amount of contributions made on your behalf, let's say, by the employing organization. So in order to get the total amount, the 1/3 plus 2/3 amount contributed for every participant or for US participant, you would just have to take your amount plus 2 times that amount and have then the 3/3. Oh, you can point? Okay. Well, actually, no point. Sorry. Oh, here. Oh, yes. Okay. Well, this would be here. All right. So I'm not going to detail. If you have more questions, we can go back to that. What is important at the time of separation from service? There are a few elements we would like to underline because, first of all, you may all have heard that, oh dear, whenever someone retires, it takes ages for this pension to come into payment. That is not actually the case. Most of our pension payments get paid within the benchmark of 15 business days from the time of separation. And now, it's not the date of separation, but from the date of the pension fund having received all 3 or the last of the mandatory 3 separation documents that we need in order to calculate your benefit. So, from that date, when we have received the last of these 3 documents, we count usually 15 business days to complete a pension or the pension processing. However, those 15 business days are provided that, first of all, the 3 documents that we receive and that we need, the separation documents, have been completed correctly, both by you for the payment instructions and by the organization for the what we call separation notification and the personal action form. So actually, unfortunately, many times there are errors on either of these forms or all, because some people may not know how to correctly complete the payment instructions form. So they give us all kinds of information, but maybe not the complete bank account, or they don't sign. You have to sign every page of the payment instructions forms. Things like that, or we don't get the original. So what we need are 3 separation documents. From you, payment instructions on probably form Pensi 7 or Pensi 6, but likely Pensi 7 if you're a retiree, on which you have to give us your benefit election on page 2, very clearly indicate what is your entitlement, or what is the entitlement that you elect. You have to date and sign that page, and you have to provide your full name on that page. Then on page 3, you have to give us your banking instructions. So we need to know your exact bank account information. You have to inform us of the currency in which you want your benefit to be paid. And you have to give us an address where we can reach you. Please include a personal email address and telephone number. And you have to, again, sign and date that form. So all this seems very easy, but unfortunately many times it's not necessarily correctly completed. So this is the first thing that you can take care of. Make sure that that form is completed correctly. And then the organization submits, and that form, this payment instructions form, needs to reach the fund as an original document. We do not accept copies, we do not accept email attachments, fax. We need an original. And then from the organization we need what we call a separation notification, on which we get the pensionable remuneration rates for you for the year during which you separate, and possibly prior year depending. Without that information, we cannot start calculating, obviously. Again, this form needs to be completed correctly, it needs to be original, and it needs to be signed by the authorized finance officer. If that is not the case, we can't go ahead, we have to go back to the organization and check what's going on, please see. So, what we're saying is that these documents have to be correctly completed and original and reach us before we can start processing benefit. If that is the case, then we can go and probably, and I would say really in 90% of the cases, a benefit can be processed within 15 business days. You can imagine that many times actually it will take longer because there are issues. Another issue are discrepancies. So the contributions reported during your time of contributory service may not always have been reported correctly, or there may be a discrepancy because of periods of special leave without pay, or part-time, or whatever that is. But there are reasons when then we have to go back to the organization and say, okay, can we clarify why do we have these numbers, why didn't you report these numbers, or whatever it is. So then there might be a time lapse during which we are going back and forth with the organization to clarify and ensure that the benefit we are going to calculate and pay to you is the right benefit. Yes, so therefore it may take longer than these 15 business days. But there's a lot you can do to help to make processing or make the separation process smooth. And also there's one more thing. What was I going to say? Well, never mind, let's go back to this then. So what you have to submit also as a retiree are certain supporting documents according to your situation. So if you're married, please submit a marriage certificate. You always have to submit a birth certificate for your spouse. If you have children under age 21, please submit those birth certificates. Then we need ID documents, etc. So we have a full list of documents. You can get that list from us. Those documents need to be in file for us to set up, for example, a surviving spouse, to set up the child's benefit payable for your children under age 21, etc. So there is a number of documents that you should collect, and maybe you can make sure as early as possible that you have them. If you don't have them, to start collecting them. We only need copies of those documents. We don't need the originals, obviously. The only thing that needs to be original is the payment instructions. And that's basically it, what you can probably do to help speed up the process, as well as with your organization, make sure that you have everything in order with your organization, because most organizations will probably not be able to release your separation notification for as long as the clearance process within the organization hasn't been completed. So if they see that there are outstanding amounts that you owe, or the leave hasn't been completely clarified, that will probably hold back the issuance of the separation notification. So whatever you can do to be in order with your organization, it will eventually help you get your pension sooner rather than later. And then of course, once we start processing a pension and putting it into payment, we pay retroactive amounts back to the date of entitlement, that's obvious. So if there is a lapse between the date of separation and the date when you actually start to get the benefit, we will of course pay whatever is due to you from the day following the date of separation. Oh, okay. Right here. Next. Very quickly, here's a list just of what are documents after separation of service you may be encountering. I'm not going to go into details here. Let me just check something maybe, if you need something like sort of, we call it a tax statement. So if you need a statement saying how much pension you received over the year, you have to inform us. We do not automatically send out these kind of documents, so we don't send out the equivalent of a salary slip every month, because we are just handling too many files. We have over 60,000 retirees, so you can imagine we can't issue every month 60,000 such letters. So if you need it, of course we can issue that. So you just have to send us an email, please, and ask for a tax statement to be issued. Once we have set you up for this kind of statement, you would get it automatically every year, sort of around the end of January, beginning of February. If you need a specific statement, please also contact us and we can issue a statement of benefits. Anything that you change in payment instructions or mailing address is very important. Please inform us. Because if you don't inform us, of course your benefit will continue to be paid to the bank account that we have in file. Or we continue to send you official information to the address that we have in file, and this may contain something called the Certificate of Entitlement, which is a document I'm going to talk about a little further on. But if we don't get, because call the CE process, the Certificate of Entitlement process. For those of you who are already retired, you may be aware, but every year the pension fund is obliged under our status to send out what we call a Certificate of Entitlement, which basically is verifying that you are alive and continue to be entitled to benefit from the fund. This is an obligation that we have to fulfill, so you have to help us, and you have to actually complete a form that we send out each year to anyone who is in receipt of a pension from the pension fund for at least 6 months at the time of when we send it out. Every year we send the CE out at the end of October, and we need you to have returned the CE to us as soon as possible, but no later than April of the following year, so that we can then verify your signature on the form that you're returning to us and ensure that you continue to be entitled. If we don't get your certificate of entitlement by this deadline of of April of the following year, there is a risk that your benefit may be suspended. So that causes a lot of worries to certain beneficiaries because, as you're aware, we have beneficiaries residing worldwide. So this this letter, the Certificate of Entitlement, is sent out by us first time at the end of October. It reaches our beneficiaries usually within the month of November. However, depending on how remote your location or your residence is, it may take even until December and sometimes even until January. It depends on the country where this is sent. It mostly depends on the postal services. There are issues, of course, that certain countries will not receive mail, or there's issue with, difficulty with delivering this kind of letter. So what we're saying is, if you haven't received the Certificate of Entitlement, there's a second mailing at the end of January, where we send out the certificate again to all those who have not returned it by mid-January. So we have a tracker report we run, and those who haven't returned it, we send a second mailing. If then again we don't hear from you by mid-April of the following year, then we start to try and follow up with you. But if we don't get anything that tells us that you're alive, we will suspend your pension, so that then probably this will trigger our beneficiaries to contact us, those who are concerned, and then we can reinstate the pension. So this process is very lengthy for the pension fund, but it's also, as I said, a concern for certain beneficiaries who may not get the certificate. And therefore what we say is, if you haven't received a certificate of entitlement, say by March of a given year, you could just send us a letter with your original signature and a date and your retirement number saying, hello, I haven't received my certificate of entitlement. Could you please take note that I'm alive, and here is my original signature. We would then not suspend your pension if the signature on this original letter is the same as the ones we have in file. This is a way of preventing a potential benefit suspension if there is an issue with receiving the certificate of entitlement. However, please, if you ever do receive this form, the CE, send it back in any case, even if you have sent us a letter, and even if you have sent the first form, just send it back. Because in the end, our tracker, our automatic means of tracking who returns the CE, works only with the original certificate of entitlement, which has a barcode on it with your specific information. So anyone who returns that and we receive it, we will be able to scan it into the system and immediately pick it up as received. So that makes life much easier. And again, given that we have over 60,000 beneficiaries, it just is a safe way of being accounted for. Again, if you send a letter, we will take it into account, but I'm just saying that's the safest way. Alright, I'm going into lengths in this only because there are a lot of issues with the certificate of entitlement, and we just want to make sure that you're all aware that there are ways of ensuring that your pension continues to be paid. And again, if it was suspended, unfortunately, of course, once we reinstate it, it will be paid retroactive to the date of when it was suspended. But it is, of course, a big concern for anyone whose pension is not paid regularly. We are aware of that. There's a tracker online. You can check receipt of your certificate of entitlement online, just so you know. Again, give it a good 4 weeks from the date when you send it, because we have such a tremendous volume of CEs returns that it takes a while for us to send it. Alright, so just a couple of frequently asked questions. So you don't have to ask them in this session, but We often get the question, or we often get contacted because people or retirees find that the benefits they receive isn't the same as the month before, and there's some sort of reduction, so they say, why on earth is there a reduction in the benefit? Most of the cases, if not all, it is due either to bank charges between the correspondent and receiving bank. These are your responsibility. It's not the fund who's paying for them. So that is one of the reasons. The other reason is after-service health insurance deductions. The pension fund, if you elect this option, can make deductions directly from your pension to after-service health insurance. We only carry out this service of deducting. We have no visibility at all into after-service health insurance files. We don't know how they establish what you have to pay as contributions and why there may be a change. We can see a fluctuation, but we cannot explain to you why. So if there is an issue with after-service health insurance, we will always forward you on to after-service health insurance because we're just not able to help you further. So most of the cases, if there are changes in the benefit amount paid, it is due to either bank charges or ARSHI, after-service health insurance deductions made. Yeah. All right. Here are our contact details. So you know the website now, but probably you want to get in touch with us in person. We have a telephone number, of course. You may have already tried to call us there. We have not enough staff to handle the huge flux of incoming queries we receive on the phone. So we advise, rather than calling us, contact us by email. Our turnover time in email response is, of course, not as ideal as it could be, meaning we don't respond immediately, but we do respond usually within 5 to 7 business days. So that may not be immediate, but it is certainly less frustrating than hanging on the phone and not getting through because all our client service assistants may be either on the phone already or helping someone who is walking in or dealing with email queries. So best, contact us by email. You will get a response. Give it a few days, please. Don't send another email. Just wait a little. But we do respond, and most of the times, most clients are satisfied in the response they get through email. Of course, if it's very urgent, then by all means, of course, call, but we just want to keep the frustration to a minimum. All right? That's basically it. And I think now we're moving on to the questions. Do you want us to finish those? So we will move on to questions as we receive right now, and hopefully answer them. Thank you. Give us a couple of minutes if you want. Okay, give us 1 minute so we just have a look at the questions and see whether we can answer some at the same time. Okay, let's just start. We're just going to read them out and try and respond as briefly as possible because there are a lot of questions. Okay, first question. When one retires at normal retirement age, okay, when one retires at normal retirement age, does the person receive an official announcement in writing of the following? A, the lump sum amount, if selected, the monthly retirement pension amount, or reduced pension amount if elected, and then the monthly deducted amount for medical insurance. So, you will receive from the pension fund an official benefit letter once the benefit has been calculated and established, put into payment. Once the benefit has been calculated, gone through all the stages, released, and then put into payment, we will send out this letter that gives you the amount of contributions you made to the fund during your contributory service, confirms the benefit election you made, the lump sum if you elected one that is paid to you, the yearly benefit amount paid to you, and any retroactive amounts paid to you. We do not give information on amount deducted for after-service health insurance. That is separate. We do not communicate to you in writing about after-service health insurance. It's not our competence, okay? But this benefit letter is very complete information it gives you on any entitlement from the fund. If you have children under age 21, it will be included in that letter, what kind of entitlement you get or what kind of amount, the amount you would get on behalf of children under age 21. And it would also tell you if we have in record a surviving spouse entitled to a benefit in case of death. So the answer to this question is yes, you do receive an official announcement once the benefit has been implemented. By the way, once you have elected a benefit and it has come into payment, you cannot change your benefit election. So there's no way, if for example you make an election for a full retirement benefit, we start paying it and you realize, oops, I actually would like to have 100,000 cash, so I'll just write back and say, now could you just recalculate and give me a cash amount or a lump sum amount now. That is not possible. Once a benefit is implemented, the pension fund does not accept a change in benefit election. So choose very well and be sure of your benefit election before you submit your form. And the second question is here, is the monthly retirement pension amount fixed or does it change based on inflation for cost of living? Yes, there is, as we explained earlier, your pension is adjusted for cost of living like salaries are, and is, in that case, is the person informed of cost of living adjustment? Well, yes, but only do we set out cost of living adjustment letters? Yes, yes, we do. So if there's cost of living adjustment, yes, we set out a letter. A bit further.
Okay, we have a question here. If you leave your organization before you're vested in the pension plan, so before you complete 5 years of contributory service, do you get the money that you have contributed? The answer is yes. We return your own contributions only. So what I would urge you all in this room is to forget the organization share. This is not really for you, right? If you have less than 5 years of contributory service, the only option you have is a withdrawal settlement, which means a return of your own contributions plus interest of 3.25% per annum. That's it, right? If you have more than 5 years of contributory service and you opt for a withdrawal settlement, we return your own contributions plus interest, and we add 10% for every year after the 5th year, up to a maximum of 100%, right? So let's say you leave after 7 years of contributory service, so it's your own contributions plus interest plus 20%. So it's 10% for every year after the 5th year, but only up to a maximum of 100%. So the most that you can get is double your own contributions. That takes you up to 15 years, right? So let's say you leave after 15 years, you only take a withdrawal settlement, so it's 10% on the 6th, 20% with the 7th, up to maximum, up to double that. So again, forget about the organization share. This will never be paid out to you, right? In preparation of the separation, how do I process if the date of birth declared by the agency and yourself does not fit? That is a big problem for us, right? Normally, you're supposed to check your annual statement to ensure that your date of birth, as reported to the pension fund by your employing organization, matches your actual date of birth. I know that in the UN, normally you can change your date of birth within your first 2 years of your employment. That's in the STAI. And we actually, more or less, although the pension fund has its own set of regulations, we do look at that STAI. We don't have any excuse. If you change your date of birth now, it's going to be a problem, I can tell you, because we don't automatically change dates of birth. It's what is reported to us, and especially not at the time of your separation that you suddenly realize that you're 5 years older, or you're 5 years younger, or 10 years younger. And I can tell you, we have situations now which delays the processing of the benefit because all of a sudden there is a discrepancy in the date of birth. If you're in this situation, I would urge you to not contact your HR office. I don't know, we have to look at that pension record, because I can tell you the pension fund does not change dates of birth even though HR would change it, right? Especially if you're already in the fund for years. That should have been settled at the time you joined the fund. So it's going to be a problem. I can't guarantee it will be changed, but please contact your HR office. HR office will have to contact the fund, and we will have to look at your individual case.
All right, so then there's a question here. Come on, am I eligible for retirement or retirement benefit at the age of 62? And for what amount if I separate at the age of 45? So we're talking about someone who separates before having reached a normal retirement age, clearly, and even before having reached age 55, which you know would be the age at which someone would get what we call an early retirement benefit. So in that case, if this person has at least 5 years of contributory service and is interested to get a retirement benefit, not a withdrawal settlement, there is the option of what we call the deferred retirement benefit under Article 30. This benefit, as we explained, is a benefit that you elect at the time of separation, then at age 45, for example, and it would come into payment at normal retirement age or as early as age 55 or any time between 55 and normal retirement age. So meaning you would not get anything before 55 at the earliest. If you don't want to wait then under this benefit, the deferred retirement benefit, until normal retirement age, we would apply again this reduction factor as for early retirement. The either 6% or 2 to 3% or 1%, depending on the number of years of service. Someone who separates at age 45, likely if this person wanted to get a retirement benefit, a deferred retirement benefit earlier than normal retirement age, would have a rather high reduction factor because likely there are a few years of contributory service. Just keep in mind that this deferred retirement benefit, you don't have the lump sum option. You have this potential reduction factor if you take it earlier than normal retirement age, and there's no child's benefit payable under this benefit. All right? And then the percentage is again according to the factors we explained earlier. So I'm not going to go into detail, but it's calculated as any pension. Yeah, that's it.
Question, when are we not entitled to a retirement benefit? A normal, a full retirement benefit, you're only entitled to it if you're 60 or 62. If you separate from service, any age below your normal retirement age, of course, you're not entitled to a full retirement benefit. I think that's clear from the slides. Right? We have two questions here from the Myanmar group. I think it's about the two-track. Can Myanmar pensioners offer the two-track system? I can't answer that. I don't have access to the web at the moment. We don't have the password, but we can check. I believe so, but please don't quote me. So you can approach me after the thing once we have internet access so that we can check if Myanmar is possible for the two-track option. There's another question here too. If the pension is, let's say, paid in local currency, which exchange rate do you use? There are two things, right? So let's say you retire now, your pension is established in US dollars. You have the option of getting it in local currency without going on the two-track, right? Two-track is separate. Two-track means that your benefit will be established under that track and it will be in that currency. Whereas if, let's say for Vietnam group, you separate now, you wanted to receive your pension payments in dong. Without going on the two-track, that is possible, but it's the quarterly rate that will be applied to your pension. So you look at the website, look at the quarterly rate, see if that's to your advantage or not, then you request to be paid in dong, right? So it's the UN quarterly exchange rate, which is available in the website. For the Myanmar group, let's say the two-track is possible, of course, how do we establish your benefit in the Myanmar currency? At the time of your separation, you look at the 36 months average exchange rate. Whatever that rate will be, that will be your base. Myanmar local currency pension, and from then on, it will be compared between the dollar, and you get the higher of the two-track. There's a question, I believe it's from a retiree for Myanmar. There seems to be an adjustment in the salary scale. I think there is a special measure of 13% to the net salary for 1 year for all active U.S. staff in Myanmar. And the question is, will this be applicable to the retirees? And I think that's one of the questions that we got here, whereby how and will my pension amount be affected as a result of a comprehensive salary survey for active staff? The answer to that is no. You're a retiree, any movement in the salary scale for active staff members, unfortunately, you're not covered by that. I mean, your pension is already set, so of course you don't get adjustment to your pension because of a change in the salary scale of, that's applicable to active staff members. Unfortunately, that's just how it is. You're no longer an active staff member. According to the slide, it was mentioned that a G3 level for 30 years for the last 3. My question is the staff whose grade is under G3 or G1 or D2, are they still eligible for a pension fund? Yes, of course. Again, for as long as you are a UN staff member with a regular UN contract, whether you're a G1 or a USG, it doesn't really matter. You're a fund participant. If you are vested 5 years, of course, you are entitled to a pension benefit once you retire. Right? So we don't make any distinction. It doesn't really matter what your grade level is.
All right, so a question relating to the certificate of entitlement. So in case both CEs, so the one sent out in October and then the one sent out in January, are not received and the letter was sent as requested, how do I know that my pension will not be suspended? Indeed. If you send the letter, what you could do, maybe follow up also with an email to the pension fund and just say, could you please confirm receipt of my letter? So give it a little bit of time before we can confirm receipt of the letter, because again, given the volume of incoming correspondence we have in the fund, so it will take some time, but if you give it some time, we will get back to you with an email saying we received your letter and all should be in order. Again, unfortunately, we don't have the capacity of being proactive and reaching out to you actively saying, we received your letter, thank you very much, everything is fine. You have to ask for feedback because we don't have the means of doing that proactively. But if you do that, you should get a response in due time. Another question is coming from Malaysia, asking prior close to pension in 2 years, can we ask for transfer contribution to UNFCU? I believe maybe there's a mix-up between the term UNFCU, which is, as you know, is a bank, and UNJSPF, which is the pension fund, and this mix-up is not unfrequent. A lot of people mix it up. So I presume this means UNJSPF. No, I think it's UNFCU.
I mean, I can only assure that the question here is before you separate from service, you're 2 years away from retirement, can you ask for a partial or whatever, transfer of your pension contributions to UNFCU? The answer to that is no. You have to separate from service. You cannot do an advance. Is that what this question means? You have to separate from service. You cannot take a loan off your pension. You cannot we cannot advance you your pension payment. You have or you must separate from service first before any payments could be effected. I think that's what this question is trying to do.
Okay. So yes. So we cannot accept voluntary contribution periodic. Periodic follow-up, so the person would have to confirm every 5 years, I think, Depending, okay. So regularly, every number of years, that the disability continues, and if that is the case and confirmed, the pension payment for child's benefit, disabled child benefit, would continue too.
It is, however, not automatic. As I said before, it needs to be applied. You need to apply, right? So it's not because you separate from service now, you just expect the payment of a child's benefit to be continuing. It has to be approved by the staff pension committee. I mean, in this case, if the person is already receiving a disabled child's benefit while in active service, the likelihood of it being approved is, of course, high. But we cannot say that it's automatic. It needs to be applied for, and it needs to be approved first. And if you haven't done that, you have to do that right now, because I think the person already separated on 5th of March, 2012. So if you haven't applied for it, do so right away, so that at least the child can be paid as of your separation date. The secondary benefit applied for local FTA.
Please.
Well, again, a secondary dependent benefit. If you have a secondary dependent now while you're in active service, right? The thing is, secondary dependent benefit is a survivor's benefit. So the participant has to die, the retiree or the participant has to pass away first before we can even consider paying a secondary dependent benefit. At that time, of course, we will have to review the file. Was this person actually getting a secondary dependent benefit? And if so, is that secondary dependent still alive or not at that time? So it's in the future. Now, I noticed you mentioned that normally it would help if the person, the secondary dependent benefit is on your personal action form. But I can tell you now that we also have exceptional cases where if there is sufficient proof that that person is actually supporting the secondary dependent benefit, even though that person was not in receipt of a secondary dependent benefit, we could potentially pay out a secondary dependent benefit. But that's, it depends on the proof that we actually receive from, when the person passes on.
Maybe there's one question that's rather specific for a long service staff member who's now on sick leave more than a year and sometimes a stroke. Whoever wrote this, I would say we do that after the session and discuss it in person. You just come. Okay, we discuss this afterwards if you don't mind, because it's very specific and I think we have other questions. Okay.
There's another question here again for the Vietnam proof for the 2-track. Again, as I said, at the moment, the 2-track option is not available for you. Will it be open in the future? I can't really say. We need to study it. We need to see the CPI movements. And yes, indeed, it's been reported, but I don't have access to the internet. I can't see as to when it was first reported, but we don't have historical data. I think that is the problem for Vietnam. It's only quite recent that the UN Statistics Office has been getting the Consumer Price Index for Vietnam. So I can't really answer this question as we speak, but again, it will have to be looked at. It's not even our section who's looking at it, it's actually the payments unit of the pension fund who reviews the CPI movements for every country. All I can say at the moment is that Vietnam is blocked in our system for 2-track calculation. I'm not saying that it's going to be like that forevermore, but as we speak, unfortunately, it's not an option that's open for Vietnam. If I choose to receive my pension payment in US dollars, when the CPI of my country changes, will my pension be changed? If you remain on the US dollar track, whatever is the movement in your country of residence will not affect you. You have to declare that country as your country of residence. You have to go on that track, the 2-track, not for Vietnam, for somewhere else. And it's only at that time will your pension be adjusted using that local track. Otherwise, if you remain on the US track, your pension will only be adjusted whenever there is a movement in the US cost of living, in the US CPI. It's the only time that your pension benefit will be adjusted. You can't see anything else, right? Will my pension be affected as a result of the comprehensive survey? As I said, once you're a retiree, your pension benefit is set in stone. Any movement in salary scales for active staff members are not going to be applied to you. Unless it's a retroactive thing where if the salary survey, let's say, was only completed for a past date, for a past scale. Let's say you separated now, if it's backdated, then yes, we will adjust your pension. But nothing after, not for future adjustments.
Alright, so there are a couple more questions also on this sheet we got beforehand. But one is, if I work for a different UN agency, am I eligible for my pension after 5 years? Yes. For as long as you're a participant or for as long as you're a staff member of a member organization of the pension fund, and you transfer from one of these organizations to another, you continue for us as a participant. Of course, there are certain conditions, but basically for as long as you're a staff of one of our member organizations, you're a participant in the fund. And if you accumulate contributory service with different organizations, for us it doesn't matter. What's relevant is the duration of contributory service, whether you reach 5 years or not, etc. And then another question, what happens to the pension of those who contribute for 5 years or more, but then they stop contributing when their age is less than normal retirement age? So similar to the question we had earlier. Someone who's younger than normal retirement age. So then the question is, what are the different options for these people? So is the following understanding correct? And the understanding is the following: are these people able to take one of the following 3 options? Option 1, decide to get an early retirement benefit. So again, if someone has 5 years or more of contributory service and has reached at least age 55, the option of early retirement is open to this person. Again, with a reduction factor as we explained. Second option, deferred retirement benefit. That is a benefit I explained earlier, open to anyone younger than normal retirement age, and even to someone who is younger than age 55, if this person has 5 years of contributory service or more. Again, just keep in mind that the reduction factor applies if this pension came into payment between age 55 and normal retirement age, and that there's no lump sum, and that no child's benefit is payable. Also question in this case, if someone then wants a deferred retirement benefit, do they have to make a specific decision? Yes. You do have to give us a benefit election. If we don't get a benefit election from you, we cannot act upon, obviously. So if we don't get a benefit election from you, within 3 years from your date of separation, if you were younger than normal retirement age and younger than age 55, we will deem you deferred, meaning you will no longer have the option to get a withdrawal settlement, but we will decide for you that in that case you had, or you're deemed to have elected a deferred retirement benefit. So what we're saying, this is basically for someone who is younger than age 55 and who does not give us a benefit election at the time of separation and not within 3 years from the date of separation. And then here the third option was, could this person then who was younger than age 62 or 60, younger than normal retirement age, withdraw a lump sum? Yes, if that was elected, we would pay out a lump sum. And then the question continues, in this case they have to make a decision within a period of 3 years. So again, back to this time frame of 3 years from the date of separation, during which someone who wants to make an election between a withdrawal settlement and a pension benefit, yes, we need to get that election within the 3 years of the date of separation, otherwise we will make a decision. I think this is basically answering it.
And I have a question here, I believe it's from a retiree. I think it's very case specific. Would you like to just approach us after this? Unless you want me to share your question. But it really is just a regularization of your pension record from Mr. to Ms. And also your question is, can you change? You want to approach?
It depends on you. Thank you.
I think, we can do it after. We have to correct your records, definitely. But I think one would probably be beneficial to everybody, where you wanted to change your periodic benefit from monthly to quarterly because of the banking charge. I don't know what the amount is, but yes, it can be requested. We don't usually encourage it because it's a manual processing for us, which means that we have to suspend your benefit monthly and just pay you quarterly. So our payroll group will have to monitor that and make sure that it's paid according to the schedule that you had asked. But yes, if the banking charges are exorbitant, of course we have to take into account your request, and we do it. It's handful, and it's a manual transaction for us, but if you really make a case, then it may be possible to change the schedule. Okay?
Thank you.
But yeah, we'll definitely have to change your record. Now, I think there's a final question. Can you explain more on the flat rate benefits? Flat rate benefit is what we call a minimum benefit, meaning that you cannot go a certain level. I mean, there are minimums set, and I think there are minimums set for a retirement benefit, for a disability benefit, for a survivor's benefit, and children's benefit. So normally we look at your standard retirement benefit, if it's a standard retirement benefit. If there is no other benefit payable, we look and see, this is the minimum benefit, this is before you took a lump sum. Because once you take a lump sum, of course your periodic benefit is it's reduced. So without the lump sum, depending on the amount of the benefit, you cannot go below a certain amount. There's a guarantee amount to your retirement benefit. So if you are in that category, we can look at it. I can explain some more flat rate benefits, but basically that's where it's at. There is a minimum level set. If the pension is very small, we do adjust it and put you to a minimum. And that is assuming that your minimum is higher than your standard rate. The flat rate.
Yes,
yeah, but we have the rates. So, yeah. One more explanation on that, we can go on.
I have one question. If somebody separates and then after 2-3 years re-enter in the system, how do you calculate if this person was working was contributing for, let's say, more than 5 years, then separates from the UN, and then after 3-4 years re-enters in the system, must this person to pay for let's say the years of interruption?
No. Okay. In the funds regulations, there is no possibility for voluntary contributions. So let's say you will work for 5 years, 6 years, right? You separate from service. There is a break of more than 3 years. Normally, we would ask you, what do you want us to do with that first period of participation? Because normally, when you re-enter after 3 years, that's a new participation for us. That's a re-entry. We cannot really consider it as continuous. But if you are paid for that first, 6 years, you may restore it when you re-enter the fund, so that way, at least your contributory service of 6 years could be added to your new participation. But that's restoration. It's not really continuous participation. We will have to give you a new pension number, but you pay back what was paid to you, and you can add it to the new one. But it's a completely new separation. So let's just say you work before 1990, right? You separate before then. You join after 1990. That's a re-entry. Your normal retirement age will be 62, no longer 60. That's the difference. But basically, it's a new participation.
Maybe just the relevance here is that did you separate and then re-enter? Is the time frame more or less than 3 years? Because if it's less than 3 years, and you haven't received a payout from the pension fund, and you haven't made a benefit election at the time of separation, but you have elected what we call to defer your benefit election under Article 32. So if you have less than 3 years and you re-enter, in that case we would just count the period between date of separation and date of re-entry as what we call a breaking service, and then continue your participation under the same pension fund number, and your participation is a continuous period without a break. Provided, again, that you haven't received a payout at the time of separation and you haven't elected a deferred retirement benefit, for example. But if you have more than 3 years between the date of separation and date of re-entry, you go back to what Lisa said within the period.
Are we taking questions from the floor?
Yes.
Thank you very much. Yeah, my name's Bruce Campbell. First of all, I want to thank you both for an excellent presentation. I've learned a lot in the last hour. I also think it's an excellent example of delivering as one, to see all 23 agencies. Imagine if we had 23 pension funds, and we can really see some tremendous advantage of working together as a joint UN pension fund. So that's nice, especially here in Vietnam, where we also work very hard to deliver as one. My two questions, one is the 62. Is it likely to change within the next year or two or three? Will it be increased? And that's the first question. As the rest of the United States has gone to 65 and even older in some countries. The second one was the graph that you showed, which actually shows us as our first year of having a deficit. The momentum behind that, it won't change because life expectancy will continue to grow. So what will the fund do in order to arrest that quite sharp decline? You gave us a good picture in the beginning, but is it truly a good picture if we anticipate continued increase in life expectancy for both men and women? Thanks.
For normal retirement age, yes, it's on the table. The likelihood of it changing to 64 or 65 is already being discussed. The issue there is that, first of all 23 member organizations have to agree to change. The fund cannot just unilaterally change because that would be, not to the advantage of our participants. We can't really go on our own and let's say we'll increase it to 65, whereas you're being forced to retire at 62. Then you will only be early retirement, we will never pay you a full retirement. So it has to go in tandem. But yes, it's on the table, but getting the 23 member organizations to agree is a challenge. Also, there's the issue, if it's going to be approved, then of course there will be the grandfathering business. Like those who are already in the fund has acquired rights. So you can't say just because you change it to 65, the others, like us, I would like to retire at 62. I don't want to wait until 65. So all those who are already in the system most likely will be kept on in their current normal retirement age, the same way as the 60 and the 62 group. Right? So there are those issues, but definitely it was on the table, but getting all 23 member organizations to agree is a challenge. So I don't think it's going to happen in the next 2-3 years, frankly, but who knows, right? The graph, the deficit, again, we're waiting for the results of the actuarial evaluation that was, just currently ongoing. And they would have, the consulting actuaries will have to make a recommendation on what the next steps is if the deficit will continue. Most likely, it's probably still going to be a deficit, but it depends on how big the deficit will be. Based on the latest study, and they may have to consider, let's say, adjusting the contribution rate to meet the deficit, or I don't know, I can't really predict as we speak, but the fund is actively monitoring it and making sure that we react in a timely fashion. But without the results of the latest actuarial evaluation, I can't really say more.
Thank you. I'm Tipton from UNDP. I've been on pension for almost a year. So I don't have any questions, but I have 2 recommendations and 1 observation. The first recommendation is it's important to establish a complete process to guide staff who will be retiring soon. Based on my practical experience, there isn't any standard or any full process, either in the pension fund in New York or in the country office. Because when I prepared my documents, I received some advice here and sent to New York. The message came, I got my name wrong. I corrected my name and sent again, it's wrong. And then I sent documents. The next message came from New York saying, well, something is missing. I submitted the documents, I sent again. Another message came said, something else is still missing. So there isn't any complete process. I spent time reading, nobody advised me. I spent time reading all the documents, and then I submitted my files. Then message came. So it's important to establish a complete process to guide staff who are retiring. That's one recommendation. Second recommendation, the country office should be given a certain role to guide staff who will be retiring soon. Based on my practical experience, my colleagues in the country office would say, I don't have an obligation to help, or I don't have the capacity to help because I have not retired. I have not gone through the process. There has been an excessive reliance on the pension fund in New York.